I hope everyone out there is doing well. The past couple of weeks in the stock market has been a little torturous and it feels painful. But when we take emotion out of it, let's kind of look at some of the facts. The market is having a little bit of a pullback, and that's expected. That's okay. Overall, the market has been on a tear for a very long time. It has been climbing, climbing, climbing. Inevitably, it needs to have some pullback. It needs to come up for air. And I think honestly, the rest of us also need to come up for a little bit of air because we have these high expectations. And when it suddenly has a little dip, everyone is freaking out. And I think it's overkill. To begin with, I want to go over a couple of facts, and I'm sure that most of you are well versed in this, but I want to cover it anyways just because it is that important. The market, the S&P 500, it's still up over 9%. That's still a great number. I mean, it has a lot of room to fall down if it needs to. I certainly hope that it doesn't. In looking at the S&P 500 since 1928, the number of years between 1928 and 2023 where it's had a 5% or more drop has been 94% of the years. Almost every single year has had moments of pullback. And the number of years that have had a 10% or more drop, it's 64% of the years. So more than 50% of the years, it's going to have 10% or more pullbacks. And the next is the number of years where it's had 15% or more of a drop is 40%. Like that's almost half the years. Granted, I mean, there's some years are worse than others back to back, but we've been pretty lucky lately. And then the number of years where it's had a 20% more drop is 26% of the time. So 1/4 of the years, you're going to have up to like a 20% or more drop. Once again, we've been pretty lucky. We've had things pretty smooth. Yes, there are a ton of fears out there about, are we going into a recession? I don't know that answer. I don't think anyone else does. The reality is, I don't think we're going to have a hard recession if we do. If we do, it'll be, in my mind, soft as of right now, because there's no major factor causing it. When you look at COVID, we had a major event. There is a plausible reason why the markets took a major dump. If you go back to the housing market, 2008, 2007 timeframe, once again, there was a very good reason why we had this major drop in the markets. I don't see any major indicators yet. And yes, everyone's saying there's the fear index, there's all these other indexes that are flashing and they're saying these things. Could they be right? Sure, but I don't see a leading cause. For me, that makes me feel a little bit more comfortable. If there was something that was screaming and blaring, that would worry me. The only thing that I think is possibly concerning is commercial real estate, because that I think has a little bit of risk. It has for the past year and a half, 2 years, but we're going to see that one play out. Now, on top of our markets having these pullbacks, yes, there's a lot of fear in the Middle East. That's out of our control. We can't touch that. It's going to happen. It's going to happen. We also can't control the fact that Japan had a major correction on Monday. That was kind of caused by their own situation where they'd been sitting at 0% interest rates for the longest time. They raised them. The expectation is this is going to occur. And there's a lot more associated with that. Other people have covered that topic a great deal. Once again, that's outside of our control. So if you think about the things we can control our emotions. And that's kind of my point of view in all of this. I try not to look at the media too much. I'm trying not to look at the news too much. I'm trying to almost insulate myself now because I want to just focus on life and live it, because it turns into an echo chamber. After a while, you start seeing all these things where they're screaming fear, screaming this, because fear sells. I think we all get that. Even in my thumbnail, I feel horrible because I kind of make it clickbaity, but I also word it as a question mark, like, is the market going to, take this dump? I don't know. And my actions that I'm going to take, well, I'm kind of listing it out to you. I feel bad even putting that out there, but that is the question, and this is how I'm addressing it. But I don't like the fact that everyone's pushing the fear angle so much, because that's the last thing any of us need. And I think anyone who's a long-term investor, you realize that's just unnecessary. I love Buffett. He is, I think, so many people's idol when it comes to investments, but in some ways, and I'm going to say something that I think a lot of people could give me a lot of flack for, and I don't mean it to be offensive, but in some ways, Berkshire and Buffett are almost a liability. And the reason why I say that is everything they do is watched under a microscope. So if Buffett chooses to sell, 49% stake in Apple, everyone sees it and they freak out. People start to say, oh, should I be pulling my funds out? Oh, should I be taking a similar action? So in some senses, he almost becomes a liability because so many people follow what he does. And some people could say, wow, he timed the market and he got ahead of it and he's doing all this. He's, I think, always done a very good job as far as riding the highs, kind of pulling back some of his cash, waiting for corrections to occur, reinvest his money. In some ways, his actions are creating his own self-fulfilling prophecy because he's so big. And I could be wrong. I hope I'm wrong. Please don't hate me in the comments. It's just a fleeting thought that I have lingering in my mind as far as is he ahead of things that much, or is he in some ways causing it because so many people watch and follow him? Don't let fear rule your actions. So what am I doing? What have I done last week? What have I done this week? Well, what I can tell you is I haven't been selling at all because that would be the last thing that I would want to do. Now, I did sell several weeks ago because I felt like I needed to build up a little cash reserves because I felt like we've been riding a very high momentum for a long time. And I wanted to capture on some of those, whether it be my NVIDIA or some of those tech stocks. That was just my choice. And I try to share those details in my newsletter so that people can kind of get an update as far as why I'm thinking the things that I'm thinking and why I'm doing the things that I'm doing. I try to buy a little each week because of dollar cost averaging. But last week and this week, I've actually been buying a little bit more. The reality is, if you're a new investor, you want the value of these stocks and these ETFs and mutual funds to come down so that you can afford them, so that you're going to be able to gain a lot more momentum long term. But for those of us between the ages of like 30 and 50 or 55 or whatever, we've probably seen a lot of pullbacks and corrections, and we're okay with it, hopefully. Hopefully we're getting acclimated to seeing those things. But people that are retired or close to retirement, this is probably a very, very scary situation. And I would expect those are probably a lot of the people that might be pulling out their money because they have a lot more fear. Totally understandable. Hopefully a lot of those people also have fixed income assets to protect themselves for like a 3 or 4 year stretch if there is a recession. Those are a lot of things that I talk about in other videos. I'm not letting my emotions take control over me, and I'm not running with fear. I'm trying to take this very level-headed. I try to look at the facts, and I try to just say, this is kind of what we expect. It's kind of what we need. Yes, could the Fed be stepping things up a little bit sooner? Sure, absolutely could. I think this is probably going to light a fire under them a little bit to kind of spur a little bit more reaction. The unemployment rate bumping up to 4.3% last week. Also, a little bit of bad news, but not unexpected. The whole point of raising interest rates was the expectation of unemployment maybe going up so that we can cool off the inflation. So once again, things that are expected are happening. It's just that when it affects the stock market, we all get a little fearful. Totally understandable. But my point of view is I'm going to tune out the echo chamber for a while. I'm going to take a reprieve from looking at the news and everything else. And hopefully you can too. Maybe you're just too tuned into it. But for me, I'm going to go spend time with my family. I'm going to go exercise. I'm going to work on other videos on what to do next. What's the next stage of investing? I see a lot of upside when I look at the quarterly results of like Palantir last night. They have good fundamentals, and it really worked in their favor. Now, on the flip side, if you look at someone like an Intel, which I talked about Intel quite a bit a few weeks ago in one of my videos, and I tried to warn people, Intel, this is not the year to invest in them. Like they're trying to feed a dead goldfish, as I kind of listed in the video. It's not going to pan out very well. But in 2-3 years, yes, they're going to be a great investment. It's just not today. And that really showcased because their fundamentals are messed up and it's showing in the stock price. I'll probably have nobody watch this video, and that's okay, but I felt like I should at least state what actions I'm taking or nothing, and kind of how my approach and how I feel about it, and also what my objective view is on all the information that's coming at us. Overall, I'm just going to stay the course. There you go. There you have it. That's my 2 cents. All right. I'm going to go hang out with my kids. Chill out.